Well, under this part of the law, insurance companies are protected or insured from heavy financial losses. In other words, insurance companies could receive possibly billions of taxpayer dollars of bailout money if Obamacare doesn't go as planned. Bottom line, the insurance companies were given a safety net, so they're protected. But not average Americans. They are exposed to the harsh reality of Obamacare.
Every day, the stack of sad stories coming into my office grows ever taller. Like the letter I received from a small business owner in Frisco, Texas. He says that his premiums are set to rise by 22%. Basically, he says this law will take down my company and the 125 people that I employ, or it will require me to reduce wages, thus hurting the very people who are just trying to make a living. I also heard from a woman in Louisville who said that she and her husband got a notice that their deductible will double and their premiums will go up as well. At this point, she writes, for us to start a family next year, it will cost over 15% of our combined household income before we even get covered by insurance to have that child. We need help. And consider this experience that a woman in Keller, Texas is having. 14 years ago, she was diagnosed with multiple sclerosis. And because of the new law, she's about to lose her coverage.
Some conservatives in Congress are fighting to repeal the insurance company bailouts. That's what they are. But it's another key element to this defective law. So is there any hope of this repeal passing? Joining me now, private medicine advocate and Obamacare expert Patricia Newman. Patty, you know, it's funny, as I was watching this whole thing unfold 3 years ago, Obamacare, I was wondering to myself, and I didn't know the answer at the time, how insurance companies were signing on and even wanting to participate in Obamacare at all. How did they lure these insurance companies into possibly a financial disaster? Well, now we know. Now we know that they're insulated, at least for a short time, from basically a stop loss here.
That's right. This risk corridor ensures that they don't lose money, at least for the next 3 years. Now, there's a lot of reasons why the insurance companies were all gung-ho for Obamacare. They figured that with an influx of so many new insured members, they were going to make a killing. And they didn't expect all of the catastrophic rollout of the website. They didn't expect that people, especially young people, were going to say, this is going to cost me too much money. I'm not going to insure. So I guess the government knew, though, that that might happen, and they put in this provision, the risk corridor provision, into the law to protect the insurance companies in the event that their expenses exceeded the amount of premium that they were going to receive.
So you think that insurance companies were looking at this law and salivating and saying, hey, there's going to be millions of more people into the system and we're going to get more money. But you don't think at the same time they were looking at the thing and saying, wait a minute, government top to bottom in this thing is going to eventually ruin us. I mean, because that is, I mean, you and I know that is the goal. The goal, one of the goals is to wipe out all insurance companies and have the government take it over.
I think they were really, you know, nearsighted in this whole program. Originally, yes, the number of new insured people was very attractive to them. When the pre-existing condition clause came out, they really rebelled. Well, this was their little gift. This is so that they could make the money at, you know, from the other end. And normally, a risk insurance is out there in the regular market. They're called stop-loss insurers or reinsurers. And what they do is they take premiums from all these companies, and this third-party company invests this money and keeps it growing. And then if there is some kind of catastrophic loss of revenue for one of them or a bad year for another one, that is what makes up the difference.
Right.
But you need to have the free market principles working for this to work.
Right. It's like a Lloyd's of London policy. It's a super policy for the catastrophic problems. So now, effectively, you and I, taxpayers, or the federal government, is that third-party catastrophic insurer. It's our tax dollars, right?
And here's the problem. The problem is, remember that you can keep your insurance fix that they threw in there?
Yeah.
Well, this really puts a twist into the whole equation, because if you can keep your policy, it may be a limited policy that doesn't cover all the things that Obama promised. It also makes for the ones that are signing up to be only the sick. So now the mix is not like a normal risk pool, it's more like a toxic pool of patients. So when it was just recently, November 26th, Kathleen Sibelius, the Secretary of Health and Human Services, comes out with an announcement that the original plan to make that the stop loss limit of $60,000 for this corridor to kick in, lowered it to $45,000. And that's very telling. That means their expected numbers of enrollment are going to be nowhere near what they predicted, including the fact that the CBO originally figured, well, this is just like a reinsurance policy. Right. Therefore, there's no need to score it. Right. There shouldn't be an expense.
So the insurance companies now are realizing, hey, we made a deal with the devil. And that's not very surprising to us. So do you think it's going to unfold the way it's designed, and that is for 3 years we're going to be subsidizing the insurance companies, or is something going to derail this?
I am a little worried because of this toxic pool of patients that it really is going to become a huge expense to the insurance companies, because you have to remember there's no lifetime minimum anymore. There's no caps for expenses during the year or your lifetime. There is only sick people getting enrolled in this. So it is a likely possibility that these bailouts are going to kick in, and they are billions with a B, billions of dollars that now the CBO thinks are going to be added to the deficit. Right. So we went from zero to billions of dollars.
It was all smoke and mirrors, but we knew that at the time. Now, I guess all of America is figuring it out. Patty, thanks for all that.
Thank you.
Coming up next, a dog enrolls in Obamacare as the Daily Ledger continues.